the top losers on Nifty following a global sell-off seen in metal stocks. The Delhi High Court orders an independent evaluation of the Singh brothers' encumbered assets. And 5 states will elect their representatives to Rajya Sabha today, giving the ruling BJP an opportunity to increase its tally in the upper house of Parliament.
We are hovering in and around the 10,000 mark. Thanks for tuning in to Countdown. My name is Neeraj Shah. So 9999. So in and around the 10,000 mark. Must say we've fared fairly okay. And it's been steady at this level. Maybe a 30-40 odd point uptick or downtick. But steady at these levels for most part of the trading day today. So you'll see this very tight band within which we've operated in for most part of the trading day today. The market breadth has remained adverse. And I don't think it's really become more adverse. So it's been constant all through the trading session. 1:8 or thereabouts in favor of the declines. And I think the mid caps and the small caps, to me, small caps have fallen a bit more from where they started. No, actually, no. Even the small caps, they started off 1.65 odd% lower, 1.85. So it's been steady as she goes, really, for our markets. Yes, with a downward bias, but not really too dramatic a fall. Post the dip, post 10,000. I mean, we are thinking about whether or not we'll go down all the way to 9,800 or thereabouts. Must mark what Europe is doing in the session. Must also mark what Dow futures are doing. Europe has opened with a mild bit of a gash, nothing too dramatic, mild bit of gash nevertheless. And the Dow futures will come up on your screen after the deep gashes yesterday, about 0.25%. So again, nothing too bad, but it is a fair bit of red that we have on the screen. A lot of damage in individual mid-cap names as well. And I'm sure Navneet will talk about that. I want to talk about the large caps and what they're doing. There is some green representation. HCL Technologies, to my mind, the standout stock because it started off in the red and then moved up and is now at the top pole, the pole position on the Nifty, 1.83%. Bharti Infra marginally higher, Z marginally higher as well. But the bottom row remains almost the same. Some bit of banking, some bit of commodity presence. So Hindalco, Vedanta, Tata Steel, and then the banks here. Yes, Axis, SBI, ICICI Bank, essentially the corporate-facing banks, private or public. All of them have taken a knock. I don't think the HDFC and the HDFC banks of the world or ITCs of the world, the heavyweights, have really fallen too much, but they don't require to fall too much. The others are doing the job to pull the index lower. But what about liquid universe, Navneet?
You know, it's not looking great at all. Every day we've been breaching some of the important levels. So today it was the day when Nifty breached the 10,000 mark for the first time in the last 6 months. Bank Nifty's breached the 24,000 mark. And also remember, we've got expiry next week. It's a truncated week, hence only 3 days left. On Wednesday, we'll see the March series expiring. Well, in today's trade, if you could just pull up the futures and see where the premium is currently. Yesterday, I remember the premium declined to almost 13 points. So the premium has gone down further to 2 or 3 points. On every pullback, which we just saw in the last 15 to 20 minutes, there is selling coming at the top. So watch out for that. Nifty open interest is up almost 4% for the futures. And pull out the Bank Nifty as well. Let's see what's happening there. Bank Nifty today has been dragged lower by both the PSU as well as the private banking space. 13% higher after seeing 7% open interest being added in yesterday's trade. So telling you at these levels as well, there are fresh short positions that are being seen for Bank Nifty. Well, in terms of options data on the Nifty side, the 10,000 call strike, that's become very, very active today. There is aggressive writing seen, as you can see on your screen. Almost 30 lakh shares have been added today for the 10,000 call strike. So far, the maximum OI was in the 10,000 put, and the bulls could actually not defend that mark. And the reason for that is more got to do with the global cues that we've been getting. But today, the 9,900 put has become really active. So that's seen some sort of addition. That's the next level probably the markets will be watching out for. If you go by the premium on both the 10,000 call and the 9,900 put, it is giving you some range of nearly 200 points to almost 9,870 to about 10,080 on the upside, at least till the expiry day. In terms of stock futures, just few stocks, IT stocks have bounced back after seeing a gap down opening in the morning trade. So HCL Technologies has done pretty well. We've seen some fresh long positions coming up there, and right now HCL trades almost at day's high with gains of 2%. Union Bank has been in focus. It's touched its fresh 52-week low. A new fraud has been unearthed, and that's the reason why it's trading on the lower side. It's gone down on very high volumes. We've seen some fresh short positions coming up there. And lastly, the metal counters, which are reeling under pressure, one of them being Steel Authority, which is out of F&O band today. On high volumes, the stock has fallen, and Neeraj, very aggressive shorting has been seen here.
Well, we'll watch out for some of these names. I think commodities today and Tata Steel individually as well would have fallen irrespective of whether the news about Bhushan Steel would have come about or no, because commodities today have looked a very, very weak pack. Let's talk about what to do in a scenario like this, if anything. Shailendra Kumar, Director and CEO at Narnolia Securities, joins us right now on the show. Good evening, Mr. Kumar. Thanks so much for joining in. What are client conversations currently looking like? And what's the dealing room feedback? What's the screen feedback? You must have read the screen for so many years now. What is the screen telling you? Is there possibilities of some more downside before some normalcy gets restored?
Yeah. So if you look at from the angle of how the market is behaving right now, next week being a lot truncated, and 31st March is also very close. So right now the screen is not giving you any strength kind of a sign. So it will remain something like little volatile surely, but will not have any large pullback I can think of. And people are usually, so those who were not participating in the market last year and was waiting for some kind of a correction, naturally they are smiling faces, because now the market has come to a level where the comfort of many has improved vis-a-vis what it was at the beginning of this calendar year. So there's a mixed kind of a sentiment.
Okay. Having said that, I mean, the constant commentary hitherto, Mr. Kumar, was always that when asset prices are coming off, go out and buy them selectively. When you are thinking of buying it for yourself or for some of your large clients, are you now actively placing, rather, what do you call it? How do you call it? Spacing out your buying pattern, even in stocks that you wanted, over a period of time? I mean, is that prudent enough to do? We don't really know when the uptick will come about, but it doesn't seem like there is any big reason for the markets to move up in a hurry.
Yeah. So, see, the last year the average price earning ratio based on 1 year forward was about 20 times. And now, right now, if you look at, we are trading at close to 18.5 times 1 year forward earning now. Having said that, this does not mean the bottom is very close, because you can have the price earning ratio on 1 year forward can go, say, to 17, 16.5 also, right? But the idea is those pockets of the economy which are not dependent upon global issues and the things happening around, and there are many to name. Like, so you see, you can think about all the retail spaces, right? You can think about the construction company, the way the tendering has happened this quarter. They are sitting with a order book which will be running, which will give them very clear 2-3 year stable earning trajectory. Many others. So FMCG, a lot of name has come up, and the business model has got stabilized for many names. NBFC space, again, you can have a lot of bottom fishing opportunity. Private banks itself, a lot of the name in professional services, gas utility. So there are a lot of pockets right now which would be, which are giving you a good buying opportunity. Maybe the prices can fall from here on somewhat based upon earning multiples. But the idea is like, there are good amount of spaces where the earning trajectory or earning growth will be sacrosanct over the next 4 or 5 years, and that's the space you can go buy one go right now. Maybe a space a little bit if you are a very close market watcher and don't want to see any mark to market losses even for a day or a month. But the idea is there are good many spaces where the growth looks very sacrosanct, very structural in nature, and those are the spaces where one should go, because market will not tell you all the good news around and will let you buy. So these bad news happening, global trade stuff, maybe a lot of thing happening domestically in political front, maybe bit of cases around LCLT resolution as well. So these negatives will give you opportunity. Only thing is that you have to look at the right pockets and good stocks in the right pockets which you understand, or maybe you think the earning will be structural 4 or 5 years. So there are spaces for somebody who is sitting outside the market right now to get in and may spread or maybe buy in one go also.
Shailendra, you said private banks. What about the PSU banks where the valuations have corrected a lot? Do you see any opportunity there?
Selectively now I'm seeing a little bit of valuation comforting in one or two name. See, the idea is like what? For all these PSU bank, you have about say 9% of NPA. So aggregate loan book of all the PSU bank is about close to 55 lakh crore. So about 5 lakh crore is the NPA. Now look at the NCLT cases. In the the first series and the second series, you have total resolution going on for 4 lakh crore of NPA. And they're just 40 cases, like so 40 cases, 4 lakh crore. Now the key thing to watch out here is like if you look at how these cases get resolved, the mechanism under IBC actually gets implemented. So unlike a lot of initiative in the past, it doesn't get dragged in the courts and things doesn't get derailed. So if that happens properly, so large part of NPA is getting taken care of. Even the RBI last regulation of stopping all the S4A and the SDR of the previous era, and coming out that if you can't resolve something in a particular period of days, you have to put all the cases in the NCLT, right? Now, even if you take the standard restructured asset which are on the books of these PSU banks, so totaling about say around, so that will be creating about a provisioning requirement of another 1,50,000 crores. Now look at the last 2 years also, the average quarterly provisioning had been around 40,000 crores. So that this new fresh number could easily be taken care by this PSU lender in the next 4 years. So tactically, in terms of appearance of a value somewhere, this year would be some time where you will find some of the really value proposition in the PSU space. Of course, structurally for 5-7 years, we don't see their business improving. So problem getting over will give you a tactical opportunity to ride through some kind of a 50% gain sort of. But structurally 4-5 years naturally is a tough space to be in. But couple of large name like Bank Baroda and all. So where the structured asset, restructured asset is already very small than the pre-provisioning profit for a year for the bank. So there are some value emerging now in PSU space.
Okay, but the PSU banking space continues to reel under pressure, at least in today's session. Shailendra, one pocket, which had a gap down opening and has seen a good recovery is the IT pack. And it's just not about today, IT has outperformed on YTD basis. We've seen Nifty IT giving returns of between 10 to 11%. Do you think at these levels now, should somebody put their money into IT pack or the rally is over?
See, what has worked in IT for last couple of months, like one, the threat of US administration becoming very harsh on Indian IT outsourcers has receded somewhat, right? Secondly, the kind of a valuation discount these IT companies were trading vis-a-vis the overall market was very high. So a kind of a mean reversion happened there also. Thirdly, if you look at some of these IT names are able to, see the new era of outsourcing where you have to revolve around digital. So you don't have very large deal sizes, and you have a lot of small deals to happen, less number of days to finish off one deal. So they have restructured their business model. So there are three combinations which they are working in. Naturally, there are still some names which has not caught up that much in large cap. You can see, think of SCL Tech kind of a company where the catch up still has to be, so they have not gone to, they have not reverted to the mean as far as the valuation discount goes. So there are a couple of names there also to look for, look interesting. But I think the larger part of the juice has already been taken in the market in the last 3-4 months.
Okay, so Mr. Kumar, what should people do in a scenario like this? Let's say people are convinced that this is a long-term bull market and therefore they should put some money to work in the current market scenario because prices would be prices would be much better than what were a couple of months ago or on Jan 29th to be precise. Where is it that people can put money to work? I believe you have some liking for the insurance space individually as well. Is that the only pocket?
Right. No, as I said, see, the hypothesis for investor right now, already, we have less than 10% of Indian money in the equity market. So there's large space for people who are not in the market. Now think of a hypothesis like, in 2 years, where the Nifty earning per share will be. So like, if you go by the consensus, it would be something like close to 680, 690. Our estimate is 643 for now. So if I look at FY20 earning, the P is close to 15 times. Now, at 15 times, 2 years forward, if you're getting something, yeah? I
agree with the thesis. So, that thesis I agree with. But now if people are wanting some hand-holding about what stocks or what sectors do experts like you feel money can be parked into, what would you advise them? I believe you have you have a liking for Bajaj Finserv amongst others.
Correct. Yeah. So in the pocket, if I say there are a lot of spaces, gas services, I said in the beginning, FMCG, construction, professional. We like insurance space a lot. So Bajaj Finserv is one stock which somebody can start accumulating at current levels. The idea is very simple. They are into three businesses, right? One is the consumer credit business, which is Bajaj Finance. Then they are into life insurance as well as the non-life insurance. If you look at their, like say, non-life insurance, they are the second highest grosser in terms of premium and the most profitable private insurer, right? In life insurance also, they are one of the most efficient capital utilization insurer, if I can call it like. And in terms of consumer credit, the way they have used the technology and the way the management has built a strategy around, getting a very scalable business model is commendable, right? Now, if you look at the three sum parts, a valuation of something close to 6,100 is very fair for a stock where the management pedigree is very strong and the execution of their plan over the last 5-7 years had been excellent. So that's one good name for an investor to build portfolio or start building portfolio at least.
Shailendra, you mentioned you're expecting an EPS earnings growth for Nifty around 680 or 690. Did I hear that right?
Yeah, so FY 2680 is the consensus number. We are expecting 643 right now.
So is that northwards of 20% growth that you're looking at for FY 19?
No, FY 19, FY 19 numbers are 545. 643 is number for financial year 2020.
For FY 20, okay. Because I thought you were suggesting for FY.
See, the idea is what? See, the idea is what? Yeah.
Go ahead.
See, the idea is what? See, in the next 1.5 years, we will be close to, say, October, November. See, the idea is, say, in next 18 months, you will be close to October of 2019, right? And October 2019, you will find the market trading on the basis of FY 20 numbers. So that's why FY 20 EPS is important if you're investing for a 1.5 or 2 year time frame.
Okay, Shailendra, there's been a sharper correction that one has seen for broader markets as well. Any individual stocks in the broader markets where at current levels where you see more value now?
Okay, so see, there are a lot of value spaces. I mean, in terms of, see, I said about the PSU banks. So there are a couple of PSU banks, the large names particularly, they have come to a level of valuation where most of the negative which is floating around for PSU bank, the macro issues, the P&L issue, or the loan book issues, they are getting close to fair value or less than the fair value levels. The only idea is you have to must make a kind of a list for those stocks which are around that, make kind of a trackable. So as I said, if NCLT cases that is resolving the NPA issue, if there are some kind of a litigation, number of litigation rises and the resolution becomes a lot delayed than what it is expected right now, maybe that's the risk part. But otherwise, if you look at the valuation wise, there are some spaces in PSU also, which is the most beaten down, I think, for the year to buy through. I would say metal again, I'll not be very comfortable because a lot of things floating around, say, so maybe something like a pure alumina exporter, say Hindalco could be avoided. But maybe somebody can start looking at Hindalco because their business is in the US, so that will not be impacted because of lot of tariff stuff. So maybe some pockets there is the larger name also appearing right now. Yeah.
Okay. We will leave it at that, Mr. Kumar. Thank you so much for taking the time out and joining us and giving us that perspective. And well, happy investing is all that I can say. That's the view from Narnolia Securities with their thoughts. I think sum and substance, they believe that slow accumulation of select names could work out. They like Bajaj Finserv among stocks as an idea. Well, actually, might do well to bring up some of the other names as well. So HDFC Standard Life, ICICI Pru, as well as SBI Life should come up on your screen. And these stocks too have corrected. HDFC Life, I think, has hit a high of 480. It's now at 430. ICICI Pru from northwards of 400 to 376. Similar case with SBI Life as well. So even the life insurance names, naturally so, would have corrected. As we speak, though, the index at 9990, but Dow futures are down about 120 points if I'm not wrong. So the global markets, there has been some bit of worsening as well. It was not down 0.5%, it was down about 0.25%, now down about 0.5%. Europe too would be reacting. What is also reacting are PSU banks, and on specific news as well, Union Bank is the latest lender to approach the CBI after unearthing a scam. The public sector lender has filed a complaint with the CBI against Totem Infrastructure and its promoters, accusing them of a 1,400 crore fraud. Joining us now on the phone line is the MD and CEO of Union Bank, Mr. Rajkiran Rai, and Shraddha Babala is here to take us through the interaction. Shraddha.
Good afternoon, Mr. Rai. Just wanted to know what is the outstanding that is there against Totem Infrastructure, and what is Union Bank's exposure?
Out of the 1,400 crores, which is including the interest up to date, our exposure is close to about 350 crores kind of thing. But then this is an NPA of 2012. So as of March 2012, our exposure was around 150 crores.
So when had you recognized this as an NPA, and is it completely 100% provided for?
It is 100% provided, and we recognized the fraud subsequently because some of the reports indicated that, and our committees more than 1 year back had given direction to file the complaint, and the process of filing a complaint was going on because there are a lot of information to be submitted, and it got registered this week.
Sir, but the fraud was reported back in 2012. Why is it that it is being reported, or why is the CBI complaint being filed now?
No, this fraud has come out more than 1 year back. See, actually, it was an infrastructure company. So they failed to complete many projects, so guarantees got invoked, and a company went bad, and 2012 it became NPA. So that time, the total exposure of the banking industry to the group, we are a lead bank, there are 6 other banks. So actually at that time it was about 700 plus exposure. So with the interest for the last 5 years, it has reached this level. So that is one thing we need to understand. And then it has gone bad. Only during 2016, some of the reports, because we were doing the recovery process, certain things came out which hinted that there may be some fraud in the account, like diversion of funds and other misuse. So after that, our committees, because there are scrutiny committees meant for this purpose, so it was directed to file the complaint and to detect fraud. So it is not because of the present scenario, it was there, but only the complaint got registered this week.
So there's been a lot of chatter around the stress in the power sector of late. Could you tell us what is Union Bank's exposure to the power sector, and how much of your power assets are likely to slip into NPAs in the fourth quarter?
Yeah, because actually we have about 4,500 crores of standard assets as of 31st December 2012 in SDR and S4A. Out of that, nearly 2,500 crores is thermal power.
And sir, of that, how much do you expect will slip into NPAs in the fourth quarter?
Now, as per RBI guidelines, all these SDR, S4A accounts which were standard as of December are likely to slip unless there is a modification. They are likely to slip because there is no forbearance under this SDR and S4A now. So, if there is no change till 31st March, all of these accounts will slip, all SDR, S4A accounts.
And sir, what is the kind of incremental impact that Union Bank will see in the NPAs and provisions in the fourth quarter on the back of RBI's 12th February circular?
It may be slightly more than the last quarter. But then, I will not be able to share the numbers at this point of time. But one thing I would like to add here, so the similar number is going to get resolved in the next quarter because the first list of NCLT cases, so we are in the final stage of approvals now. So those cases are substantial. So I think about 4,000 to 5,000 crores for Union Bank is likely to get resolved in the next quarter, Q1 of next year. So I think we'll be back to normalcy by 30th June.
Right, sir. But have there been any discussions with the RBI for forbearance on power loans for this quarter?
we have requested through IBA. So let us see, because particularly the thermal power units, so they are under different restructuring processes at this point of time. And the reason for these accounts becoming NPA are beyond those promoters, basically. It may be the power purchase agreements, it may be coal tie-ups. So I think there are reasons why these accounts are becoming NPA. So they need some support and hand-holding. And that's why we are expecting some forbearance, at least in the thermal power units. Let us see how it evolves.
Okay, and so what about the kind of MTM treasury hit that you're expecting in this quarter, because bond yields have only continued to inch upwards after 31st December as well?
If you have seen, actually, the yields have come down by almost 20 basis points from the peak. In the last few days, the yields have moderated to a great extent. So anything between 7.50 to 7.60. So because we have already marked to market our portfolio in December at 7.32 levels. So it depends. If it ends at 7.50, it is only 18 basis points like where we need to factor in. So if anything below 7.60, our mark to market will be much less than last quarter.
All right, Mr. Rai, thank you very much for speaking with Bloomberg Quincy. That was the management of Union Bank with updates on the latest case on totem infrastructure and also updates with respect to the outlook for the fourth quarter. Back to you guys.
Thanks a lot, Shraddha, for bringing us that conversation with the management of Union Bank. But moving ahead, the CBI has gone ahead and registered a case against former MCX chairman Jignesh Shah and 4 former chairmen of the Forward Market Commission, which has now been dissolved and merged into SEBI. The case relates to MCX getting a license to open a nationwide exchange before it met all the criteria. Shailendra D'Souza joins us on the phone line with more details on that development. Shailendra, what else are you gathering?
So far, all we know that CBI has registered a case against Jignesh Shah, who was a former managing director of MCX, who no longer has anything to do with the exchange now, and also 4 former chairmen of Forward Markets Commission, which now also doesn't exist as a regulator for the commodities markets, because it has now been it was then merged with SEBI. After that, we also know that 6 others have also been accused in relation to this case and multi-commodity exchange, which actually, now what is being actually investigated by CBI so far is that that MCX apparently was not fulfilling some criteria to be called a nationwide exchange. Now, searches are being conducted at 9 locations in Mumbai, Gwalior and Shimla is what we know so far from CBI. CBI has said that they will continue to send further details as and when they get anything. Now, this entire investigation is being taken up by the CBI Mumbai unit.
Okay, Shailendra, thanks a lot for bringing us all those details. But meanwhile, the markets are still trading below the mark of 10,000. Let's see if the closing today also comes across around that mark. I just want to pull up Yes Bank before we go across to our technical experts. Yes Bank has now seen cuts of, I guess, over 4%, and it is almost trading around the day's low mark, down almost 12 rupees as we speak. All right, let's go across to Manav Chopra, Head of Research Equity at Indiabulls Ventures, who is joining us right now on the show. Hi, Manav. Good afternoon to you, and thanks a lot for joining us today. Well, a sharp correction, gap down opening. We've corrected 10% now, almost from the top. What's the call on the index at these levels?
See, for the near-term perspective, markets had managed to sustain 10,100 levels last week, for a couple of trading sessions, and a breakdown with a sharp gap lower, it definitely indicates for the near-term weakness. Also, I don't expect this gap to be filled on the immediate basis on the upside, but whereas in case of any short-term bounce from the current levels, you could witness selling pressure at 10,050 to 10,100 on the upside. The immediate support for Nifty would be at 9850, and in case if we breach that, on closing basis, we could be heading lower towards 9850, 9800. This would be for a very immediate basis, but taking a call a little bit on for a medium term perspective, this is the second month we've seen decline and over 7 weeks of consecutive declines in the market. So I sense around 9800 levels where you can expect some pause in the market looking at the current structure, and that is the time where one can look to take some sort of a confident bet. Definitely we'll wait for some confirmation, but on the immediate front, I think 9800 levels are likely to be achieved.
So Manav, good afternoon. If that is indeed the case, would you either via options or futures initiate some fresh trades, even a combination of option strategies, straddle, strangle, as you may deem fit, currently for the current series?
See, in the current series, what I suggest, maybe at the current levels, in case if we see a bounce back close to the levels of 10,050, that would be the right time to initiate, because the markets have already seen a series of declines. So the risk-reward ratio purposes, I think the right time to initiate shorts would be close to the levels of 10,050, keeping a stop loss of 10,100. A bear put ratio spread could be one of the strategies, which could be a safe strategy in such a scenario, where you have a limited risk in such markets. So I would wait for a bounce to initiate fresh shorts.
Okay, and what about the individual stock strategies for the day?
Yeah, at the current levels, I have two strategies. My first call is sell on Vedanta. The stock on the weekly charts has seen a good breakdown today, and overall metals have witnessed some sort of a selling pressure across. The stock, after a sideways consolidation, has seen breakdown with volumes and has been trading below its long-term averages. So for the near-term perspective, we can witness some sort of a selling pressure as the stock has forming a series of lower tops and bottoms, and also the momentum oscillators are in the weak zone. I recommend a sell in this, keeping a stop loss of 285 and expect lower targets of 265. My other pick would be buy on NTPC. In such markets, I think it's one should also look at the defensive space and bellwether stocks, and NTPC has managed to sustain above the key important support levels. It has also breached the falling trend line drawn from its recent peak, and has also formed a minor higher bottom. I think going forward, irrespective of the markets, NTPC could witness some sort of an outperformance, and basis of that, I recommend this, keeping a stop loss of 165, and can expect levels of 182 in next couple of weeks.
Interesting. Manav, just one more question. If you are inclined to take any trades or have any views on the commodity pack, which is getting roiled in the session today, almost everything from a large to a mid cap to a small cap metal name is down and out. What does one do here? Or what do the charts suggest? Even if you don't want to do anything, what's the view here?
Neeraj, if you look also on the commodity front from the international perspective, the chart of copper and Shanghai, then I'll come to the Indian market specifically. They are definitely hinting for some sort of a decline going forward. And when we're looking at the commodity, the metal charts and also the metal X all on the weekly front, they have actually breached important key weekly trend line support levels. And I sense that the next couple of trading session or maybe 1 or 2 weeks could be very painful, specifically for the metal indices and the stocks. Stocks like Vedanta, Hindalco, has breached key support areas, and recently whenever the stocks were seeing some sort of a bounce back, they were actually sold at the higher level. So looking at the overall pattern structure, at least for a medium term perspective, I sense metals would be a space which would going forward would underperform. Stocks like Vedanta, even Hindalco would be, I think one should maintain a sell on rise approach. Won't be surprised to see at least 5 to 8% decline in this sector.
In fact, all the metal counters have come under pressure. Hindalco is down 5%. Tata Steel too has seen selling in today's trade, and a stock like Nalco, which was up nearly 6 to 7% in yesterday's session after alumina prices in the global market inched higher. Nalco is also seeing some profit booking. That's trading with cuts of nearly 4%. Just want to pull up Max Financial intraday chart. If you could just pull up that. There's some buying which has come in at around the lower levels of the day. So Max Financial is currently trading gains of over 2%. But let's bring in Anand Tandon, market expert, who's joining us on the show now. Hi, Anand. Good afternoon. Well, you've been a bit bearish in the market, and you very candidly said also that you do expect some bit of correction. Is 10,000 the level, or one can expect more pain from these levels?
Can I rephrase?
Sure.
Can I rephrase that question? Anand Tandon, the last time that we joined us, said that he is very bearish.
Okay.
At that point of time, we were at 10,200. I distinctly remember this conversation because he was sounding like the odd man out there when he said he's very bearish. And Anand, if I'm not wrong, you were talking about a 10% odd correction. This seems like, if I believe that your mood is still the same, you must be thinking that we are just getting started right now.
You have hit the nail on the head. I think the only thing that has changed between last time and this time is that Mr. Trump has actually fired one bullet, and the Chinese have retaliated. So, I am not in the camp of people who think that, oh, all this will pass away. This has all the makings of a fairly negative kind of trade game that will start, because soon, if it gets sorted out, nothing like it, and, we can all go back to having a nice party in the market. But the reality is that, egos get intertwined. And once somebody like the Chinese starts to think that they need to be pushing back, I think things can very rapidly go down the tube from here. So all the rest of the factors in terms of interest rates going up, the macros remaining poor, the financial markets, the earnings not showing any great recovery compared to the valuation, all of that remains. The two added data points we've had is, one, the interest rate has actually moved up in the US, and two, the trade war has, the bugle has sounded. So I don't see any reason to change my view. I remain very, very bearish.
Okay, so you're not changing your view, Anand, but what could be the next level on Nifty according to you now?
I think these things take their own time to play out, because there is obviously a huge sense of denial in the market. Most people in the market are still looking at, suffering from the anchoring effect, that something that has looked like, it was 20% higher from here in terms of the smaller companies is now looking a lot cheaper. So I don't think that you'll get a one-way move down. And I think, some of these things will play out over time. There will be some relief rallies and so on. So we've had a few days of sell-off. I wouldn't be very surprised you get a new, a bit of a relief rally from here. But I'm not holding my breath on that. I think by and large, most of the rally should be used to exit. And, therefore, it still remains a sell-on rally market. I don't want to call a bottom on this as yet, till you really begin to see value emerging. And I think we are far away from there, at least in the frontline companies.
Okay, Anand, there was a selling which has come in across the board today, and we've seen a huge correction, but one pocket which has managed to bounce back. And I know we've discussed the IT pack in the recent past as well. Since the overall view in the market remains bearish, but one pocket which is doing well, does it make sense to hide behind defensives like IT or let's say FMCG as well?
Certainly it does, for those who are constrained to stay in the market, and all institutional investors are. And many of the regular investors, including people like myself, can never actually exit the market. You have to look for those places where you are likely to outperform rather than look for absolute returns at this stage. And clearly anything which is exporting is, to my mind, good. Of course, with the caveat that, one hopes that the trade war doesn't reach India, or at least not very quickly. And no major action is taken against any of the Indian exports. Already we don't have huge surpluses with most countries, except in a relative sense with the US. But assuming that there is no major problem in terms of our own trade with the US or any other country, then by and large, I think that looking at a global economy is probably a good idea, because perhaps there will be a little bit of growth coming from there. The domestic market is already doing quite well in terms of the consumption growth, and these companies are already priced to perfection and then some. So I don't think that they're going to offer you much defensive downside protection, though they may continue to show relative.
Anand, since you said you cannot stay away from the markets, I just want to gauge what's the approach right now. Have you lightened your portfolio, or are you still invested completely?
Of course, I have lightened my portfolio considerably. In fact, I missed much of the rally last year because I did it too quickly. Obviously, as I said, one is beginning to look at those companies which have some chance that they will not fall off a cliff from here on. IT is clearly one. I actually like pharma as well, though that's not been a favorite of the market. And perhaps again, I'm jumping the gun here. But I think over the next 24 months, I think some of the companies will look reasonably decent. Much of the chemical construct also looks quite decent. Many of them have actually started to export, and China has pulled back, and that's likely to be permanent. So I think some of those companies have come off quite considerably and are beginning to look a little more interesting. There are, lots. The good thing with India is that there are lots of bottom-up plays which you can always try and figure out a reason for. All I'm saying is, from a top-down approach, I think a stay-away policy is a bad policy for the next few months till things become a little clearer.
Yeah. Okay. So, what are the pockets of safe haven, if you will, and do we need pockets of safe haven right now? Remember, there's no compulsion to invest if you are an individual investor. But the case is different for a fund has to try and think about where to park money, because the flow of fund continues and you can't be on cash all the time. For an individual investor, there's no necessary or no prodding needs to really go out and invest your cash today. Sit on cash. It might become a best asset maybe another few hundred points down the line if you need the markets correct. But just keep that at the back of your mind when you're listening to all the conversations that we have on different media houses and different platforms as well. What's moving around on the markets at the broader end of the spectrum? I think PSU banks continue to grind lower. So Union Bank is down 9, Syndicate Bank down 9. Navneet was speaking about sales, seeing some heavy short positions. That one is down about 7% as well. A clutch of other commodities too, looking very, very wobbly right now. JSPL down about 7% as well. The reasons could well be global in nature as well, Anand. But what does one do with some of these steel names? A month ago, steel seemed to be in a super cycle. Everybody is talking about the interest that corporate groups across the world and in India are exhibiting in buying out some of these assets. Suddenly, things seem to have run completely sour.
Well, only in the terms of the stock price. I think the interest remains and the earnings will be very good. I don't think that you will see, the kind of profits you're likely to see in the steel companies in this quarter I don't think would have been seen for many, many quarters in recent past, or even in distant past actually. So I think the performance of steel companies will remain reasonably robust. Of course, if the trade war were to accelerate or become more intense, then there could be a case to be made for softer steel prices globally as well as in India. Also, my only fear is that there may be a bit of a issue with so much of if the NCLT processes move quickly as they are supposed to. Some of the capacity which has been lying dormant because of the fact that these are kind of bankrupt companies will probably come into the market faster than the market anticipates. That could also put some pressure. But for the near term at least, I don't think that there is any major threat to the earnings. The valuation is a different issue. How much you want to pay for a cyclical business like steel, which will go through its ups and downs, is a matter of individual choice.
Okay. Last question from my end, Anand. What about the safe havens? I mean, pharma ceases to be that, but IT certainly still has that strong bastion mood, sentiment approach as well. What do you do here with IT?
I think you should remain in it. In fact, if you've not already invested, it may not be too late even now. Of course, it is not as attractive as it was 4 months ago. But if you look at Accenture's results, it is showing that there is at least a 10%, they've reported a 10% kind of growth rate, which means that for somebody like Accenture, that would have to come from discretionary spend. Clearly, discretionary spend is going up. And if the economy in the US and Europe does well, despite the trade wars, I think the IT sector can actually do reasonably well. And in a market like we have currently, it will certainly remain an outperformer.
Okay, Anand, Tandon, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Always appreciate your time.
Thank you.
He continues to remain very, very bearish. These are the terms that he used. Okay, one more bearish view before we get back to Manav Chopra as well. He's been with us. But Sarvendra Srivastava, independent market expert, joins us right now on the show. Sarvendra, good for you. Very happy for you. Firstly, thank you for joining in today. But your shorts are now yielding in you the desired money. I'm guessing you're still staying short. My question is, for the immediate term, while you have some part of your trading portfolio which is already short, Are you initiating fresh trades on any of the key indices?
Yeah, very good afternoon, and thank you very much for getting me here. And we have been Fridays we are doing this show regular, so people who are watching us probably can fix that time and date if they want to hear me, if they find it useful. And I certainly think so. Last 5-6 months we have been always negative on the market based on the type of research that we do, long-term cycles, and that is where we had put a target of 9,700, 10,000. So today that range has got tested. The upper end of that range has got tested, and now the lower end seems to be pending. Why I would say that is that 9,700, 9,600 probably could be on the cards because there would be more weakness coming in from the global peers now. So the way the setups have been placed on now, the Dow Jones or a Nasdaq or an S&P 500, I think their more downsides are still pending. And if US were to go down another 8%, I don't see how we can stay around these levels or just around 9,700 also. I think probably we could do another 100, 200 points lower as well. But on the trading side, on the strategy side, now our mindset is that we would like to now start booking some profits and looking to get lighter on the shorts, not want to add aggressively. So adding would be a case-to-case basis. A macro call, the first leg of a macro call probably would start getting over. So starting today and tomorrow onwards, gradually you will want to start taking profits, getting lighter on the short side and reducing that exposure first, because the first leg of the hypothesis has played out and you would not like to get greedy, and you would definitely like to take some money home. So I would say that gradually from now on, from today onwards, you will slightly, on our clients and on our book, we will try to start booking profits, get lighter on the short side, and then reassess the position around 96, 9,700. If this move were to extend, looking at what the global markets are about to do, then yes, you could go straight down from here as well. So that's one risk that you'll have to take. So you would carry some shorts, but not 100% now. So I would say that from here on, below 9,700, I would not want to remain more than 30-40% short. And only those shorts that I would like to carry and would believe that on an individual basis, they could give me another 5-10% more. So 9,700, I would love to cut around 60 to 70% of my shorts and then hold on and see if I want to reinitiate. So that would be the broad hypothesis right now.
Okay, before we get your stocks, Manav, I just want to get you in this discussion. So there's a bit of a consensus here. You anyways believe that 9,800 could be an immediate level that we could reach as well. The move towards those levels, Manav, would it be a swift one? As in, do you foresee that happening within the current expiry or maybe the next 5 odd trading sessions? Or could it be a bit of a labored move?
Actually, I think it could be quite choppy on the lower side. Neeraj, we've actually seen consecutive series of decline. Specifically, if we talk about on immediate basis, last 4 weeks on Nifty, we have been making lower tops and lower bottoms, and I think going forward, if we hold on to 9850 levels, maybe you could see some more choppy move, and then eventually we may broke lower. So I don't see any sharp series of fall happening on immediate basis, but that decline could be very gradual. So I think anybody who wants to initiate fresh shorts should not really should get on immediate basis, but can actually wait for any bounce back, wait for a good levels to enter shorts, and then one can take a pause but not go on immediate front. Also looking at the charts for bank Nifty, we have seen consecutive series of 7 weeks of decline. There is a sense that we can see some sort of a bounce back. So I would actually wait for a bounce back to initiate fresh shorts.
Okay, so wait for some bounce back if you want to create fresh shots on the benchmark indices, Nifty or Bank Nifty is what Manav is suggesting. But Sarvendra, in terms of individual stocks, what are you recommending today?
I would say that today there will be a mix, and first time probably in now 5-6 months, I would probably put a first buy trade here, and which is not a defensive. And so I would say talking about Nifty, where we discussed that around 9,700, you would like to book some profits and then reassess the situation if the bounce is coming or not coming. But in continuity basis, the first call that we have today is a buy on Coal India, where we believe that 268, 270 is a good support area, and the stock is behaving nicely. Post-dividend, I think there was a gap down, but now I think the prices have settled up. I would look to trade this. This is a purely trading view, so buy for a target of around 290 on Coal India, keeping a stop loss there at 259.40 on a 5-minute closing basis. Remaining 2 trades would be on the sell side. And the rationale there would be within financials. I think Yes Bank is breaking down fresh. So along with the market, probably where the market has also gone down and broken those lows, this is breaking from a very large head and shoulder distribution pattern. So actually going forward next 3-6 months, this could be one underperformer. But for the time being, it is slightly oversold. But so we'll not keep aggressive targets. We would say that we'd like to short sell for the next 3-4 days for a target of around 270. Mind you, these are spot levels. And keep a stop loss on Yes Bank at 297.10 on a 5-minute closing basis. And the last one is a sell on CEAT. The rationale here being with the way crude is behaving, and we still believe that crude has more upsides left, and Brent around 77, 78 is what we target, and on WTI we believe that 70 to 75 is possible. So more pain there for these guys. Rising crude prices, I think they are already underperforming. CEAT has again broken down today into fresh new moves on the downside. So look to short sell that for a target of 1380 on spot prices for CEAT, and keep a stop loss there at 1451.60 on a 5-minute closing basis.
Okay, those are the individual trading strategies coming in from Sarvendra. Just want to highlight a few stocks. If you could just pull up TRF. It's locked in upper circuit for the 3rd straight day. It's a small cap company with a market cap of nearly 250 to 300 crore, but it does deal into metal spaces. Surprisingly, this stock on the day when the entire metal space is weak has locked in upper circuit for the 3rd straight day. And what else has gone up? Pull up Team Lease. That's seen gains of, I guess, 5% as we speak. Team Lease has just gone up in the last 5 to 10 minutes of trade. So watch out for all these counters. But going ahead, let's put spotlight on MCX India. The exchange is set to launch its brass future contracts on Monday. Let's discuss this in further detail with the Managing Director and Chief Executive Officer of the company, Mr. Paranjape, and also Saloni Dhanuka from our research team joins us. Saloni, take the conversation forward.
Thanks for that, Navneet. Good afternoon, sir. MCX is to launch brass futures next week. If you can discuss who can be likely participants in this space and what kind of volumes are you expecting from this?
We are launching our brass futures contract. It's a very important contract. It's the first non-ferrous deliverable contract in the country. It is the first time we're going to trade an alloy in the form of futures. We generally trade the underlying individual metals. Most importantly, it is the physical industry of Jamnagar and in the other parts of the country which we really expect to contribute to this contract. Jamnagar has more than 5,000 people who are part of the manufacturing fraternity there. At our launch event, more than 300 people among the largest manufacturers were all there, and therefore our hope is that it is these people who want a good price discovery mechanism, a good risk mitigation for their product and their export as well as their import, their entire life cycle in terms of the movement of the material. These are the people who will be participating. Very difficult to anticipate a number, but what we are going with is that in the first 2 months, we would like to ensure that at least we have 200 tons of brass in our warehouses, which will then create a very solid foundation basis which trading can grow. So that is the number that we are targeting in the first 2 months, and we will really look forward to the industry helping us reach there as we are hopeful for a successful launch on Monday.
Also, sir, after the launch of commodity options last year in October, how is the trend looking there, and how is the demand in gold options as compared to your expectations?
So I think when it comes to the trading in options, from our longer term expectations, we believe that options should, in a mature stage, which is maybe 2 or 3 years after launch, be having a notional value roughly equal to how much you trade in the futures. Notwithstanding that, I think in the 6 months after launch, we would have wanted slightly larger volumes than what we have today. A couple of reasons which we think will help us grow this. One is we need more options contracts, and therefore we are very hopeful that in the coming weeks we will get approvals for launch of a crude as well as a zinc options contract. In addition to that, we also think that in the initial period we may have to get a little bit of a liquidity enhancement scheme, and that is something which we are hopeful of introducing in the second half of April as well.
So with all of this, we believe that the longer term goal of achieving a notional in the options contract, which is roughly similar to the notional we have in futures, is something that we will definitely be able to achieve.
All right, sir. And RBI has recently raised limits for currency derivatives trading. So are there any talks with the regulator to incentivize commodity trading in Indian exchanges?
So I think these are two very different aspects that you have brought out. What RBI has done is more in terms of what they're looking at the currency markets. On the commodity specific markets, I think we have been in talks with the regulators. We are trying to make sure that we have a much more broader, wider and much more comprehensive market in India. At the same time, I think in terms of regulatory measures, it is not something where we believe it's a very prudent thing to have, where you restrict participation in any particular segment or for any particular segment in a market. And therefore, we would want to grow the Indian market in a way that domestic hedgers find it attractive and efficient to hedge in the Indian exchanges, and that is what we are working towards.
Well, speaking about regulations, SEBI has approved a universal exchange license recently, which is likely to increase competition intensity. So what are your plans to protect your volumes, market share and withstand the pricing war when BSE and NSE launch their commodity trading?
So I think there are three components of why you really have a very sticky liquidity. And in India, we have had at least two instances where there has been intense price wars between exchanges. And in both these instances, just reduction of prices or even liquidity enhancement schemes have not taken the volume away. One of these was something which we witnessed even when MCX went through its crisis 3 or 4 years ago, and we did not lose market share at all. So what we have to ensure is that our product, our technology and our people are absolutely at the par, in line with market expectation and delivering much more than that when it comes to each of these aspects. On the product side, our deep engagement with the physical market and our long-term arrangements with some of the international exchanges will ensure that we maintain or even enhance our product superiority. I think our technology has been always well respected and proven, and I'm very sure that we will be able to retain the talent we have. And these three things will make sure that we are able to sustain competitive pressure even after universal exchanges are allowed.
And so my last question to you is, as we have seen in the last quarter, both average daily turnover as well as volumes in commodity futures has declined substantially. Are we looking at a similar trend in Q4?
So our numbers are published daily, and I think Q4 has seen a very, very healthy increase. We are up more than, I think, around 20% as compared to the last quarter. And that puts us back to a number very close to what we were pre-demonetization, which for us is a very, very encouraging trend as we enter the new financial year.
All right, sir. Thank you so much for speaking to Bloomberg Quint. It was a pleasure speaking to you. So that was the management of MCX talking about their volume growth, which has passed 20% mark as compared to the last quarter. So back to you guys in the studio.
Thanks, Saloni, for bringing in that conversation with the management of MCX. But moving ahead to the chart of the day, HDFC Twins, which contribute nearly 17% of Nifty's weightage, have contributed the most if you look at the fall that Nifty's had from its lifetime levels to almost sub 1000 mark. Jayesh Khilani has drawn up a list of these stocks which have contributed to the fall. Jayesh, which other stocks are featuring in your list?
Navneet, this list is primarily dominated by the banking names. Like you were mentioning, HDFC Twins that have actually contributed nearly 17 to 20% of the near 1200 point fall that we have seen from lifetime high on Jan 29. Now, if you look at the top 4 stocks, those have actually contributed about 30-35%. The other names feature ICICI Bank and State Bank of India, followed by Reliance Industries, high weightage on the Nifty over there as well. But you can look at L&T now. A few days back when we were doing the consolidated, mutual fund buying and selling, so L&T actually featured in that list, and consensus mutual funds have actually sold into that one, followed by ITC, Maruti also, contributing nearly 100 points combined together, and Axis Bank, once again banking name features over here, followed by TCS, which actually went down post the block deal after Tata Sons sold stake in that particular company. So overall 1200 points, nearly 1200 points have been lost. Majority has been contributed by the banking space.
Yeah, well, not surprising, but yes, of late we've been talking about how HDFC Twins have not been in the top losers list. They've probably made their mark already, and which is the former part of this list, just from the fall from the highs. Actually, that's a very interesting point, Manav. For the last 20 odd sessions, I haven't seen HDFC Bank feature in either the top gainers list by contribution on the Nifty or the top losers list. Commodity names, select other banks, SBI have all been featured. HDFC Bank seems to have been lying very, very low and almost dormant in the last 20-25 odd sessions. What's happening here?
See, if you look at the chart for a very short-term perspective, it has a strong support zone at 1830 on the lower side and the levels for resistance at 1900, and the stock is consolidating near the 100 EMA. I sense that if we also look at the RSE ratio, which is the relative strength comparative, in such scenarios, since HDFC Bank is also a part of Bank Nifty, somewhere there has been buying which has been taking place near the support levels, and today also we see the intraday lows has been held of 18, 20, 25, and we've seen good amount of bounce. So I wouldn't be surprised HDFC Bank to behave like an IndusInd Bank, which is forming a series of high tops and bottoms. So once if HDFC Bank moves above 1880, which is its last week's resistance, eventually the stock could see some sort of a level towards 1920, and maybe stocks like HDFC Bank or IndusInd Bank could be the which could take some sort of a relief for the Bank Nifty going forward.
Let's wait and watch if that happens. By the way, for the week as well, the private banks like ICICI and Yes Bank have been amongst the top losers, but commodities top the list. Vedanta, the oil and oil marketing companies are amongst others which have been the top source spots. In fact, hardly any gainers. That's how you'd sum up this week. Take a break on that note. We come back from the break, continue a conversation with our experts. On the other side, of course, getting the fundamental voice too. Deepak Shenoy would be joining in. But at 3:15, we get you a sense of what dealing rooms are recommending in the session today and some closing strategies from both Manav Chopra as well as Sarvendra Srivastava. Stay tuned.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still watching Countdown with us on Bloomberg Quint, and the markets, Nifty is actually back above the 10,000 mark. Let's just pull up the rates. 10,017 is currently where Nifty is trading, so mild bit of pullback from those lower levels. Bank Nifty is hovering around the mark of 23,740 as we speak. Just want to highlight a few stocks before I go across to Deepak Shenoy. Pull up Container Corp. That's seen some appreciation in the last few minutes, the last half an hour of trade. Container Corp is now trading almost a day's high with gains of 3%. And remember, we did highlight Dish TV in the closing show yesterday. The merger with Videocon D2H was implemented as of yesterday. And as we speak, Dish TV is trading with gains of 4% in a weak market like today. So clearly, looks like there are some long positions being taken here. The counter is now trading around the mark of 70. Okay, that's about the markets, but let's get some view going from Deepak Shenoy, founder and CEO at Capitalmind, who's joining us on the show now. Hi Deepak, good afternoon. Thanks a lot for joining us once again on Bloomberg Quint. What's the reading on the markets? Are you expecting more correction from these levels?
Markets are looking weak. I think a lot of, headwinds. Little bit from the international markets and a little bit from local. I think, we expected markets to remain weak till March 31st because the long-term capital gains thing, the fact that FIIs continue to, kind of pull out in anticipation that the tax will probably hurt them, apart from the international, the rate factors. And overall, I think the lack of sentiment due to the scams that are happening in the system. I expect a lot more of this. So the rest of the year, according to me, is going to be quite tough. In the near term, we may get a rally, but a small relief rally, because that's what happens in a downturn. You get slow falls, sharp rallies, and so on. So it's going to be a rough market. We've still not found stocks that are really, really cheap, so that I could just say blindly buy. So we're still waiting and watching, and probably will participate as we go along.
Deepak, good afternoon. I remember our conversation wherein, maybe for the right reasons, of course, but the call was that if indeed the markets are falling and specific stocks are falling the way they are falling, this is when you should buy because you get the volumes and the prices that you like at. My question to you is, are you now in that mode of staggering out your purchases even more than what you were earlier? And are you now seeing downsides that you probably were not seeing 15 days earlier?
Our situation seems a little peculiar, Neeraj. We are actually seeing a lot of inflows from customers who are looking to purchase. So we are actually staggering purchases, and because now we have a slightly higher amount of money to deploy, we have to stagger that out into a slightly longer time frame. We're using days like today, to maybe purchase a little more whenever there is one on the downside. It's not yet panic. We're not seeing panic. We would love to see panic because that kind of signifies to us at least that that point is coming where the markets may turn around. But we're steadily buying literally on a daily basis and trying to get our stocks at better prices.
Interesting. Any views on the commodity space, Deepak? It's been clobbered out of shape today.
Yeah, I think the trade wars, kind of impact them the most. The fear is really America charges duties, everybody else dumps commodities on the worldwide market. Our commodity producers, specifically metals, get hit badly because you can't. Our exports have gone up, I think 2.5 to 3x last year versus 2016. So obviously there's that as a fear in terms of that no longer adding to margins going forward. I think people in the aluminium and steel space should rightly be afraid, at least, of international prices. Everybody's been expecting that come April 1st, we will increase prices. I don't know whether that's going to happen because, prices have been battered worldwide. So, as much as I say that, I think commodity chemicals, this is not really commodity, but commodity chemical manufacturers should sort of, I think they will continue to benefit. Commodity metals may not benefit quite as much.
Okay, well, talking about the commodity space and some stressed assets which are at NCLT, Bhushan Steel's lender have just approved Tata Steel's bid for the stressed company. A Bloomberg report suggests that the Tatas will shell out cash worth around 35,000 crore to acquire this company. So how will Tata Steel fund this buy, and does it have enough cash on its book to do so? And is Tata Steel actually ending up paying a substantial premium to the industry average? Nikki Merchandani is here to take us through the details. Nikki, tell us what details are you getting and what sort of cash does Tata Steel currently has on the books? How does it plan to fund this acquisition with so much of premium that they've quoted?
Sure. If you just look at the valuation of 35,000 odd crore that is expected to pay in terms of all cash deal, we are working with a derived EBITDA of a 5,040 odd crore, which brings us to an EV to EBITDA multiple, that is enterprise divided EBITDA multiple of a 6.9 times. Now that compares to your industry average of 6.5 times, which pretty much seems to be right now as per the industry standards. And how it will fund this particular debt, that will be after consideration of net debt, which is a situation of debt minus cash minus your right issue and whatever amount that needs to be added back. With that, pre-deal amounts seems to be at 75,921 odd crore with an EBITDA assumption of 20,921 crore for FY18, which brings us to debt to EBITDA multiple of 3.6 times. Post-acquisition, the debt is expected to increase to 98,121 crore with an EBITDA derived of around 28,702, brings us to a multiple of 3.4. So you would see barely any difference between that of pre-deal and post-deal. It's pretty much according to the industry standards of 3.5 times debt to EBITDA ratio. Synergies of the deal include consolidation of Tata Steel position in East, increasing its overall capacity to 18.6 MTPA from present 13 MTPA, and with this acquisition it will be a neck-in-neck kind of situation with JSW Steel and Tata Steel capacities. Also, it will increase its flat product mix, which currently stands at 72%. Back to you guys.
Thanks a lot for that, Nikki. So Tata Steel though would have fallen irrespective of the price of the acquisition paid today, because commodities by and large have seemed very, very wobbly. Deepak, almost each of these are getting challenged, that notwithstanding. Is Tata Steel a specific case in point because of the premium that they are paying? Almost every guest who's come on the channel today until now has said that they don't quite like the amount that Tata Steel is paying, and Bloomberg an hour ago put out that quantum of money that Tata Steel seems to be paying for the same as well.
Yeah, that's the fear really. I think, Neeraj, if you ask me, this is a tough game. You're talking of I think what a 5-something million tons per annum plant, and even at the best valuation we could give it, it looks like Tata Steel's earning, even if it put 10,000 crores as equity, the return on equity is 9% or so. For the kind of investment they're doing. I think at this point, 9% is okay if you're getting international level interest rates, but at Indian interest rates, that doesn't make a lot of sense. You should have an ROE that's considerably higher than what you can get risk-free. So that's why I don't like it. I don't know if this is factoring in all the positivity. If there is any negativity in steel prices, the Bhushan acquisition is going to hurt them. Plus, we know that the acquisition is not going to be smooth. The resolution professionals actually said they had problems with the plant workers or unions and so on. So, I don't think it's a net positive for Tata Steel. It may be small for them in the overall standard of things, but it may not be net positive for 4 or 5 years at least.
Okay. Well, that's the view. I think A lot of calculations at some point of time will come about the kind of acquisition price that they're paying, so on and so forth as well. And we'll talk about all of those. But it's 3:15, so let's get a sense of what dealing rooms are recommending in the session today. Also, get a check on what stocks could come in and out of the band. Okay, so Navneet, let's first go to you. And any stocks that will hit band or come out of the band?
Yeah, Neeraj, I've got 5 stocks on my list. Quickly, just 2 stocks which may enter into the F&O band. One is Dish TV and the other is Oriental Bank of Commerce, which is very, very close to entering the F&O band for today's session. So 94.1 was the total OI as a percentage of MWPL, and it looks like it could just enter into the F&O band for Monday's session. The stock's also trading with cuts. And the other one, this is quite interesting, Dish TV, which has gained in the intraday session. Currently, Dish TV is trading around the day's high mark with gains of 5%. There's huge amount of long build-up which is coming for this counter. And 3 stocks which are likely to come out of the F&O ban are Jindal Steel and Power, Reliance Communication and JP Associates. All of them, if you look at the total open interest, it's very close to breaching the 80% mark, which is required for a stock to come out of the F&O ban.
Okay, watch out for these and watch out for what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
See, I think the mood is absolutely cautious. No one's trading. It's very cautious. In terms of some of the stocks that are being spoken about, some of the dealers indicate that Bosch is pretty much near its fresh 52-week low. So some of the domestic mutual funds are accumulating this counter. So Bosch is one of the stocks that's been actively spoken about. The next stock that's been spoken about is again Z Entertainment. Some of the HNIs are rather active. It's trading near the day's high. And one stock there is a little bit of caution, and that is Yes Bank. Given the fact that the large exposure it has to Fortis and news coming out, whether the deal will go through or no, Fortis, the share price is falling. So apart from the normal concerns on the banking space, there is additional concern on Yes Bank, and that is something that is causing caution among some of the dealing rooms. But Yatin, what are you hearing?
Well, if you look at the Nifty, of course, we are finding some bit of support at the 10,000 levels. But metal stocks is, one space which is witnessing some sell-off. Of course, JSW Steel is the strongest of them, outperforming everybody. But dealers, on the basis of F&O trends and a likelihood of, Chinese steel and iron ore sliding further, technically, they are recommending a sell on JSW Steel at this point in time. Apart from that, watch out for Fortis Healthcare. Dealers are, advising their clients to accumulate the stock at low levels. Of course, the shares went as low as 10% on an intraday basis. But dealers still believe that, around that, 130, 135 mark, there is some strong support which is coming in for most of the times for Fortis Healthcare, and that is the reason why they are recommending a buy. And Wellspun Enterprises, we have been talking about the stock in dealing room checks for some time now, but dealers do indicate that even at these levels and in such markets, HNIs are still set to be buyers at lower levels for the stock.
Wow, I think Yatin probably spoke about this stock yesterday as well, if I'm not wrong. Dealers recommending Wellspun Enterprises, and in session again today, around 4% higher for this one. Any thoughts here, Sarvendra? Wellspun Enterprises, do you track this one?
Not regularly. I'll have to pass that one.
Okay, no problem. It could be a tough one. Manav, can I request you to look up Wellspun Enterprises? I don't know if you've looked at that one again, but if you have, can you tell us how do the charts look?
See, looking at on the weekly and the long-term perspective, we've already seen Wellspun being in a very good uptrend, and it has also managed to breach the important levels of 55 also on the daily basis, and recently the stock has also bounced from the support of 40. So overall the chart looks quite bullish, at least for the near-term, medium-term perspective, and it definitely outperforming the overall scenario. I think going forward, won't be surprised to see the stock even exceed its recent peak of 60 and eventually even move towards 65. So I think someone who is holding on to this position can continue to do so and expect levels of 65 and 66.
Okay. HCL Tech is arguably the strongest index name, and by the way, it started in the red and now up about 3% higher. Sarvendra, have you looked at the charts here? HCL Technologies?
Yes, absolutely. I think this is a stock under regular coverage, so you can take that as a disclaimer that we are interested party to this. We still like the IT space overall, so we will believe that the IT index currently, I think around 12,500 odd, I think still has around 7 to 8% more on the upside to go before finally probably, if at all, it tops out. So in a falling market, I think IT will definitely be a performer and could also be an outperformer. And my sense is that all the three names, which is HCL Tech, TCS and Infy, can do well. Specifically coming to HCL Tech, I think the stock is one stock which is above the long-term averages, where the market overall is below the long-term averages now. This is one stock which has stayed above that even in this weakness, and in the last couple of months, whenever it has gone around those 900 mark, 900 thereabouts, I think it's always found support, and now the long-term average is also now closing into the 900 mark. So I am saying that as long as we hold 900 on a positional basis, I think this stock has the potential to challenge the highs that it printed around 1040. So I think I would say that 1050, 1100 is possible, and anybody wanting to take that trade for a month, 45 days, you will have to keep a stop loss below 900.
Okay, let's get in closing strategies. Manav, before we thank you, your top closing strategy, the one stock or one index trade that you would take for Monday.
See, for Monday, I think going forward, one has to look at markets for the near-term perspective. So 10,050 is an important resistance. So as long as we trade below that, I think one can look to short Nifty at higher levels, keep a stop loss of 10,100. Top trade would be Bata, would be a buy. The stock has held on to its important support of 990, 690 on the lower side, and the stock is managing to also close above the 700 levels. Volumes also are giving some important confirmation. So the stock will be a buy, keep a stop loss of 690 on the lower side, and expect the targets of 735.
Okay, Manav, we'll leave it at that. Thank you so much for taking the time out and joining us. Really appreciate your time. Sarvendra, your top closing strategy would be?
See, I'll reiterate Yes Bank and see it on the sell side. And broadly, since the market has gapped down and closing lower, breaking long-term averages and also previous important lows for both the Nifty and the Bank Nifty, I would say for Monday also, I would say STBT, and I would say one stock which is following the set pattern, what the index has done, that gapped down and did not come up and continue to trade towards the lower end of the trading range for the day, is Larsen & Toubro. So my sense is that for Monday, this could slip back towards 1250, 1255. So purely on an STBT basis, a sell on Larsen & Toubro for a target of around 1250, 1255 on the downside, and keep a stop loss there at 1273.60 on spot.
Sell call coming in on L&T. Some of these media and entertainment stocks are doing well. So we did highlight Dish TV for you, which is likely to enter into the F&O ban. The other is Z, which is doing pretty well. Jagran Prakashan has turned green, and the other one is Shimaru Entertainment. I think this one's gone up just in the last few minutes. If you could just pull up Shimaru Entertainment as well. The stock's now trading with gains of nearly 7 to 7.5%. Deepak, anything from the media and entertainment space that you like?
I like a lot of stocks. They've been a little expensive. Shimaru is an interesting play. There's Saregama. There is, a lot of the newer companies in the music plays are not something that we can participate in, because largely private early stage startups. For instance, Ghana, which is part of the Times Group, I think, or Amazon Music, Google Music. All of these are plays in the entertainment area which we like but can't participate. But content owners are useful. We don't like Eros and Balaji for different reasons, but they also form part of the same bracket. We aren't buying anything right now. We're just waiting for Saregama or Shimaru to come at more affordable levels.
Okay, that's interesting. Deepak, the part two of the question would be whether or not, if not now, then a bit later on, what is it that you're keeping within your radar? I mean, where is it that you're rubbing your hands in glee, looking at the prices and thinking that, wow, you always wanted to buy these set of stocks, and now if the index were to fall, or if the stocks were to correct maybe another 5-10%, then they would be exactly in those ranges that you would want to buy them. I mean, just the themes, if not the specific names.
I think the themes, purely are some of the stocks we've been wanting to buy from the electric vehicle perspective. A lot of them have gone up, and some of them have actually come down to levels where we started purchasing them. So we're happy to kind of participate in them again. They are from the auto pack to part of some of the players in the battery ecosystem, and perhaps in the distribution ecosystem. So we're kind of happy to kind of participate in that. There is still, according to me, room in specialty chemicals because we're looking at international demand. It continues to be reasonably high. There are some trade issues now because of all this Trump action about import duties, but I don't think it affects the sector, but it will get some kind of sentimental impact, and hopefully stocks will come down so we can buy them. There are, I think there's a lot of scope for public sector refiners, especially in the refining and marketing space. So they've gone up a little bit. They're correcting. That's also providing some scope for valuations going forward. And finally, we're very excited about auto ancillaries, and they have had a run up. So if they were to come down substantially, specifically again focused on potential move to electric vehicles, I think I would still be a buyer. So those are the areas I'm looking at.
Is ICICI Bank coming to levels wherein it could become a buy, Deepak?
No, because of the unknowns. I can't say when it does fall whether I'd buy it just because of the price, because it could be another unknown that's just become a known, and then therefore the stock suddenly got a little more unattractive. So I put a price on it when we can reasonably well say that we know more than we don't know. I think that's the problem with ICICI and Axis, and of the private sector banks, I'd avoid those two.
Okay, just a few minutes for markets to close, and some stocks which have inched higher. Pull up United Spirits, that's also seen gains of nearly 1% in just the recovery has come in the last few minutes of trade. So that's going to end just around the day's high mark. United Spirits around 3,092. But the closing looks like will be below the mark of 10,000, which is very crucial according to the options data. Let's go ahead to Neeraj to find out how exactly today the closing is panning out. And Neeraj, it's not a great closing for the week as well.
Yeah, not at all. So about 2%, what the Nifty Bank is doing today, the indices have done for the week. So about 2% for the Nifty and the Sensex. The Nifty Bank probably more so. And the mid caps and the small caps probably more so as well. So the broader markets also didn't have a great day, nor did they have a great week either. 2.25% for the small cap index. That's not something that is easy to take. HCL Tech is not present on the Sensex, and therefore it will not be amongst the top gainers list, but Adani Ports having some gains. They're about 1.8%, and some gains to Infosys. So IT selectively is done okay, but look at the list of losers. Banks all the way. Axis, yes. ICICI, SBI amongst the top losers. There is weakness within the Tata Steel and Tata Motors. Also, the Tamo twins, so Tata Motors and Tata Motors DBR, both of them have looked weak. Reliance has looked slightly wobbly today, but it's banks all the way, frankly. Even Kotak and HDFC Bank participating. And if you look at the list of the top contributors on the index today, you will probably find banks being the center out there. Commodities stocks have fallen, but they are not heavyweights. So the Vedantas and the Hindalcos, maybe a Vedanta will, or a Tata Steel Hindalco may not necessarily feature in the list of the top contributors, but certainly amongst the weaker names. And dare I say that the bloodbath, if I can use that term, has been even stronger or even bigger at the broader end of the spectrum. The mid caps and the small caps have had deeper gashes.
Right, Neeraj, the mid-cap index for the week is down nearly 4%. So definitely the correction was deeper and sharper for the broader markets. Let me just highlight a few stocks from today's session. Uttam Sugar has been down this week, and we've seen consistent selling pressure in the last few sessions for this counter. So that's closing the day with cuts of nearly 11%. ADF Foods, if you remember, the counter was down 8 to 9% yesterday. So second straight day of very aggressive selling coming in for this counter. Fortis Healthcare and F&O counter, where once again it became active in the last hour of trade, and some shorting was seen for this one, Fortis Healthcare, so watch out for that. The steel pack or the metals pack to say was in focus. Nifty Metals Index was one of the top sectoral losers. So stocks like Steel Authority, Jindal Steel and Power. Remember, these two are the stocks which were outperforming the space in the last few months, came under pressure. The other pocket which was under pressure was the PSU banking space. So stocks like Punjab National Bank, Union Bank and Syndicate Bank, all of them saw cuts of between 3 to 7 to 8%. Union Bank Bank actually was down nearly 8.5% after that scam was unearned. But REC, which bounced back from its 52-week low, once again succumbed to selling pressure in today's session. So that also saw cuts of over 2%. Just few stocks which managed to gain from the media pack. Shamaru Entertainment went up in the last hour or last half an hour of trade, and Dish TV inching very higher in today's session. Watch out for this counter on Monday. And the other one to bounce back where some bit of short covering rally was seen was HCC, a counter which was down 16% yesterday, managed to close in the green with gains of 4.5%.
So all in all, at close, we have, well, not a pretty picture. Almost all indices down. By the way, just before, okay, let's first look at the statistics for today, then the week, and then we'll talk about what the world markets are doing right now. So 9988 for the index. The contributors will come up on the screen. The market breadth will come up on your screen. Firstly, the contributors. All banks and the Reliance Industries are heavyweight here. So naturally, the commodity names are not featuring because even they've fallen more. Their weightage isn't the best. And amongst the gainers, IT probably buying its little bit. So HCL Tech, by virtue of the 3% gain, is the top contributor. Their Infosys is marginal. So, but as you can see, the difference between the gainers and the losers shows you there's hardly any stock in the index, at least, which tried to pull its hand up and do something, dominated by losers. We're interested in seeing. This was on anticipated lines. A small bit of a dip towards the end doesn't matter, but the volumes would be the interesting one. And let's see the cash market volumes in today's session. Picked up a little bit. Actually, even the FNO volumes are not too less, considering it's not a weekly expiry.
That's right, Neeraj. It's way above the average. Usually, you know, average volume would be somewhere about 5 to 5.5 lakh shares. So definitely the trading activity heightened on a day like this when we breached the 10,000 mark. And even for cash, which was somewhere about 26, 27 throughout the week, is almost 32 to 32,500 today.
Yeah, you know, in the morning I was of the opinion that flows to India, whatever little flows coming in, would probably take a bit of a step back because it's a bit of an unknown territory as to what's happening on the global arena. I'm very interested in seeing what the FI number is in the session today. The DI number too, but the FI number more importantly, very, very crucial in the session today. Now, the weekly performance. And again, you will see that commodities and banks, you know, PSU banks have just taken a turn for the worse. We're just showing the Nifty out here, but if you look at the mid-cap index too, it'll show that. But banks and commodities all through, so even the OMCs are featuring Navneet. But you know, last week we were talking about how some of the PSU banks made a bit of a comeback as well. This week, all of them have been bludgeoned out of shape. Starting from the large caps, SBI out here on the list, 7%. To the central banks, Canada banks, everything has been beaten out of shape.
Right, and two stocks which have actually dragged the index lower this week, I guess, would be State Bank of India and ICICI Bank, both being heavyweights. And I think the bounce back that one was seeing for the PSU banking space was just a dead cat bounce because on every rally they're coming under pressure.
Yeah, they are. They certainly are under pressure. And lastly, look at the Dow futures before we get back to our guests. The Dow futures are now at the lowest point that they have been in the last couple of hours of trade. 212 points, so almost 1% off for the Dow now. When we started the show, it was 1/3 of a percent, or it's less than 0.5%. It's now close to 1% lower. This may change, but things aren't looking pretty on the global front yet again. And if this continues, then expect the same thing on Monday as well. Final thoughts, really, Deepak. Would the extent? Okay, I think we've just lost the snag with Deepak, but you know, the same question to Sarvendra, really. Sarvendra, while your charts may be showing, and as I heard you mention at the start of the show, that now you'll not be aggressively short and at 9,700 or closer to those levels, you'll probably take some of the money off the table. But I don't know, since you track long dated charts, do you look at the charts of the global markets, the Dow maybe, and what is that chart indicating? Have you looked at that?
Oh, absolutely. We always look at international markets on a daily basis. And if you remember last time we were there, last Friday, off air, we were discussing that how Dow could probably fall under 2,000, 3,000 points. So 700 out of that has already gone, and probably 2 days fall of 200 points in between. So overall, I think 1,000 points has gone, another 1,500 to 2,000 points pending on the Dow Jones, which means you would be reaching close to 22,000 on the Dow Jones. And if that is the case, I think that why will we stop here? And that is my concern. So we might undershoot our target, which we initially had at 9,700. We might undershoot it by 100, 200 points in the first leg. So that is definitely possible. But as I said, when we are discussing, as a matter of discipline, if you've taken some targets and if you've taken those trades, you would at those levels you would try and book out some profits and stay light. By no means we will be covering all shorts, but yeah, 20-30% short, 30% shorts can always remain till you clearly see a bottom coming into place. Now at today's weekly close, what has happened is that on a larger pattern today, we have broken down into a gap for both the Nifty and the Bank Nifty, and we have stayed low. So as long as this gap is not getting filled, and probably the recent swing highs, so which means I think 10,250 odd on the Nifty and around 24,500 on the Bank Nifty. These are numbers now absolutely sacrosanct. Till you don't cross these numbers, there's no way that this market will recover. So, and if global markets were to sell off more, which I still firmly believe that they will, I think you could add more pain on the downside. So anybody who's slightly aggressive could trail stop losses and stand. So that is one way of doing it, and that is where we recommend on the Nifty call. I must take those levels also. For anybody wanting to hold that trade from 11,100, now your stop losses, which were earlier last week, my stop losses, trailed stop losses were at 10,633. Now those stop losses have been aggressively trailed, which means we have trailed them almost close to 4%. And we are saying that now we want to keep that stop loss at 10,256.60. So the moment we cross that number on a daily closing basis, first thing is that you will be zero shorts. You will cover all your shorts if at all. If that number comes first and 9,700 comes later on, then at 10,256, which is a trailing stop loss on a closing basis, you will cover all shorts. Anybody who's initiate shorts on my trades and me for my clients and on trades, we will definitely cover all those shorts and will be zero short then. But I see a lower possibility of that happening, that we would not go back to 10,256.60 on a closing basis on Nifty and first go to 97. So that could be happening as soon as day after on Monday, Tuesday, because if we gap down, Monday also if we gap down along with the Dow, if Dow again tanks today 500, 600 points, then who knows, by Monday only you will be at 9,700. And this expiry could actually take a turn for the worse. So my sense is that with so much of OI at 10,000, which was a psychological support and an option support as well. So if we continue to stay below that number, and then I think definitely cat will be lose among the pigeons, and the expiry, because it's a short expiry, 3 days into next week. 3 days into the next expiry, and we can probably do lower numbers.
Okay, Sarvendra, let's see whether your target on the downside of 9,700 gets, whether that will be achieved or not next week or not, because as you mentioned, next week is going to be very important. Just 3 trading session, also the March series expires. Thanks a lot, Sarvendra, for joining us today and taking us through your technical views on the market. But on that note, we will slip into a break here. We'll be back with more on the other side, so stay tuned.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. Well, the markets today closed below the mark of 10,000 for the first time that we've seen since October 2017, October 11 rather of 2017. So clearly we've reached some important mark when it comes to the levels. Nifty closed below the mark of 10,000, and whereas Bank Nifty today closed below the mark of 24,000 itself, which was breached in today's mark. So 23,670. It's not been a great week for the markets. Nifty down almost 2%, but deeper cuts were seen for the broader markets itself. The Nifty mid-cap index saw cuts of nearly 4% for the week. But moving on, the Delhi High Court has finally granted bail to Karti Chidambaram in the INS media case. And Arpan Chaturvedi joins us on the phone line now with more details. Arpan, what are the conditions for his bail?
That's right. So basically, there are three conditions that he has to fulfill for the grant of bail. First is a surety of 10 lakh rupees. Second is that he will have to surrender his passports. And third is that he will not be able to close any of his open current bank accounts. So these are the three conditions. If you remember, Karti has now spent almost a month in jail. He was arrested on 1st March by the CBI. After that, he was in police custody for almost 12 days. After that, of course, he was sent to judicial custody when the CBI said that they don't need police custody, but they needed his judicial custody to further interrogate and conduct the investigation. And when the bail matter was heard, the order today finally is that there is relief for Karti Chidambaram, and now he will be released on bail as soon as he fulfills these conditions.
Okay, Arpan, thanks a lot for bringing in all those details. But switching focus now, as the US-China trade war grips Asian equities, European markets are also feeling the heat today. Let's head across to Sebastian Salek, who joins us from our London studio with more details. Well, Sebastian, all the three key indices are showing sharp cuts in today's session.
Yeah, that fear definitely feeding into Europe as well as it has done in the US and Asia. Here's where we're standing on the Stock 600 then. A third day of declines. We're at a 13-month low, and pretty much every sector on the Stock 600 falling as well. Instead, we're seeing money moving out of equities into the safe havens like gold, the yen, treasuries. Elsewhere, oil higher because Trump appointed an Iran hawk as his national security advisor within the last 24 hours. So we're seeing slightly more bullish attitude within that market, fears of geopolitical tensions and how that may benefit an oil price. And elsewhere, we're watching the pound. It's about 141 now, pairing earlier gains, but the outlook is looking slightly brighter according to some analysts. Danske Bank sees it at least one more rate hike. They're calling for more than that this year. We've got one priced in so far, which could see sterling at 149 by year end. So an upwards trajectory for the currency if the analysts at Danske Bank are to be believed.
Okay, thanks a lot for that. Really nice of you to take the time out. Hope you have a better than we did in Asia or India at least. But speaking of market conversations, on our weekly series, Alpha Morgan's market veteran Vijay Kedia speaks about his wealth creation ideas, his journey from an investor to an entrepreneur and more. Listen in.
I'm a promoter in the Lycus. Okay, that could be in disclosure or whatever it is. I have vested interest into Lycus. But let me tell you, since you have asked, I'm a failed entrepreneur. As on date, till now we are talking here at this point of time. And it's a tragic part actually. It's a tragedy, I can say, that I'm a failed entrepreneur because what I wanted to do in Lycus, I couldn't do till date. Maybe I couldn't pick up the right team. I failed into this. This is what I would like to tell you. So one can say that everybody cannot become Radhakishan Damani, that you can become a good investor and you can become a good entrepreneur also. So, but anyway, because in Likis also, actually, I am playing a role as good as a silent investor. Okay, I'm not looking after, not even forget about day-to-day affair, and not looking after monthly affair also. To me, it's like an investment, but the tag of that promoter is certainly there. But certainly, I'm not doing good. I'm not happy about whatever is happening in the company. So that we will see that going forward, what happens.
How do you generate alpha? We are an alpha. We call you an alpha mogul because you're obviously doing something whereby you are beating the market handsomely by the money that you invest. That's how you grew your money. You didn't have a large portfolio which has become larger. You had nothing and you've become larger. So you obviously generated alpha for your portfolio. How have you done that? Is it by obeying that principle of smile that you keep on talking about regularly?
Yes, actually the smile is the principle behind this. Maybe my smile also, you know. Let me tell you, like even as per philosophy also, if what you are doing and if it is not giving you a pleasure, if it doesn't give you a smile, then you are doing something wrong. Okay. So now coming to the smile, so whatever little bit money I could actually create from this market. So after that, when I evaluated it, how did it happen that only not one stock, not only Aegis Logistics, even Atulotto, or for that matter, Sera Sanitary, they went up 100 times in no times, maybe in 10 years. So how did it happen?
Sure.
So I just looked back and then I realized that smile was the concept behind that. And maybe I was lucky that I stuck to that principle. Okay. So this is what whatever alpha or beta, whatever you are saying, that was created because of the smile. So you want me to tell the concept of the smile? Yeah,
let's break it down.
Okay.
So smile is, I think S stands for small, or SM small. Yeah.
Okay, so now S stands for small. So small in size. When I say small in size, that does not mean a small cap. Okay, in a size, small in size, if a company is suppose having a market potential of market size of that product is say 2,000 crore. And if that company size is say 100 crore or 200 crore, I mean 300 crore, that can also be called a small in size because it is having just 5% or 10% of the market share of that particular product. So that is small in size. So what I feel that it is when a small size company aspires to become a medium size company, so that's a transformation phase. So that is the phase where this company can give you a multiple return to investors, a small investor like us. I'm not talking about the fund managers and all. So any private investors with a small capital. So this is what I realized. So that because a large size shares, maybe few shares can give you return. For example, like Maruti has given you handsome return in last 3 years, maybe 5 times, 6 times or 7 times. But there would be hardly any 4 or 5 shares which are going to give you that kind of return. And whenever you are going to buy those shares, it's an expensive buy. So maybe a small investor would resist to buy an expensive shares. So this is what I mean by small size company at a reasonable, because that time they are available at a reasonable valuation also. So chances are that you can multiply your money many times, not in percentage terms, maybe 10 times, 20 times or 50 times, or why not 100 times. So that is why I prefer to invest in a company which is smaller in size.
Okay. Smaller in size means smaller in that industry, not necessarily small cap.
No, not a small cap, not necessarily.
It might be a mid-cap company, but very small in its industry.
Yes.
And therefore has a lot of potential to gain market share and become larger.
Yes.
Am I
correct? Absolutely correct.
Understanding it correct?
Yes, it could be even a 2,000 crore sales company. But even then it is very smaller in size because the market size is 50,000 crore or 20,000 crore.
The man's made a lot of money, and you can of course catch this whole story and the interview, the snippets of the interview as well on our website www.bloombergquint.com. Vijay Kedia's secret to investing is smile. That story is up on the website, so do log in and you get the whole video of the interview on the story as well. Okay, amongst the last pieces of news, remember India is on the onset of a scorching summer and it's heating up the country's electricity prices as well. Spot prices on the country's energy exchanges have shot up from about 50-60% from the same time last year, but even that may not be enough to improve power generators' finances. Prashant Jain of JSW Energy says a shortage of coal has increased the procurement costs and that is likely to offset rising power prices. Listen in.
power prices have strengthened in the current financial year. If I give you contextually, last year average power prices in merchant market for the whole year was 2 rupees 69 paisa, and for the current year it's 3 rupees 20 paisa, and for the current month it is ruling close to 4 rupees at this point of time. And primarily this is happening because of the two things. One is that there is no additional capacity which is coming up in the market, so rather in the current financial year there is a decline in the capacity in the thermal space. Second thing is the power demand is increasing quarter on quarter. Last year the power demand grew by 2.5%, and current year the growth is close to 6% for the entire year. The current quarter for the January and February, the growth is in excess of 7.5 to 8%, and last quarter it was 6.6%. So it's continuously increasing. So two sides which are happening. One side demand is increasing, another side supply is contracting. On top of it, the third thing is availability of coal. So coal production has not increased. Some dispatches have increased because of the some stock which was available with Coal India, but precisely the PLFs are not able to sustain what it should sustain to meet the demand. So that's why you are seeing little bit hardening of the spot prices.
But do you think this is a phenomenon that could last? Because, I mean, in a manner of speaking, Prashant, and please correct me if I'm wrong, in a manner of speaking, this would have been the longest up cycle, if I can call it that, in spot power prices that we've seen in a really long time. Because previously, I remember they used to be very, very erratic and would come off very, very quickly as well.
Yeah, because in last 4-5 years you have been seeing a lot of capacity which was getting added up, and the demand was not growing. And it all started from 2008 when everybody wanted to set up the power capacity, and those capacities were coming up between 2012 to 2017. And now, as we know that there is already a over capacity and no new capacity is coming up, whereas the demand has been continuously going up. Right now, if you see, there is a countrywide the PLF which had hit 56% for the thermal power sector. Now it is ruling at 61%. So continuously the demand is going up, and then so is the PLF, and no new capacity will be coming up. So because of which you will see the strengthening of the power prices in time to come. So we are in the same scenario where we were in 2004 to 2008.
Some reports also indicate that rising coal prices could be a big factor as well. International markets believe coal prices have risen. The Chinese demand for coal alongside with limited coal output growth would also be a factor out here. Would you agree with the same?
Not really, because in India the power prices are not determined based on the imported coal based power. It is primarily based on the domestic coal. And if I give you the context, the NTPC weighted average power cost is 3 rupees 30 paisa, and most of the power, out of 220 gigawatt of thermal power, close to 190 is the coal based, and out of that only 20 gigawatt is the power which is based on the imported coal. Rest all power is based on the domestic coal. So it's all decided by the domestic coal, not by the imported coal.
Okay, so what would all of this mean for JSW? And we'll also talk about the power purchase agreements and the recent one that you signed as well. But I believe you sell about 30% of your total capacity in the merchant market. All of this should augur well for you, right?
Yeah, for the current year, yes. Now the prices are strengthening, because of which our PLFs will be rising. And for the current year, we had started our long-term portfolio for power was 64%, which we have now increased to 74%. So now, as we are speaking, our 26% is the power which is not tied up and which we are selling in the merchant market. And higher prices which which helps us to run the plant full. But it doesn't give us a big impact on our bottom line also, because at this point of time the coal prices are also ruling high.
Okay. And would you want to shed some light on this PPA that you've signed? I believe it's in line with what you've been doing, because I think you just told me that 76% or 74% of the total capacity is now being tied up with.
Yeah, so we have signed this 200 megawatt PPA with Punjab, and before that we had signed 176 megawatt with Haryana. So now with this PPA, our entire hydro capacity is fully tied up. This is for 25 years CERC determined tariff, and our Rajasthan project is also 100% tied up. Now we have two imported coal-based power plant. One is in Karnataka, another is in Maharashtra. Now those plants part are tied up on a long term, and balance are based on the merchant tariff. Going forward, we are working with the domestic coal tie-up, and we have already secured necessary environmental approvals, and now going forward in the Shakti linkage scheme, we will be bidding for that, and then we would like to bid for the PPAs and then tie up that capacity also.
So what does all of this do, Prashant? How Q4 shapes up and how arguably FY19 shapes up compared to what people were estimating? Q3 was a miss. Maybe compared to what you were wanting as well, Q3 would have been a miss. Will Q4 be slightly better than that? And what about FY19? Because everybody's talking about how, while merchant power rates may be volatile, coal prices are not looking like volatile and staying higher. There's a Macquarie note that I'm reading which is talking about the trend of continuous increase in coal prices as well. What are your thoughts here?
So in JSW Energy, Q3, Q4 are seasonal quarter, because we have a mix of both the thermal as well as hydro capacity. Out of 4.6 gigawatt of our total capacity, 1.3 gigawatt is hydro, which we have the seasons of Q1 and Q2 are the entire, most of the 85% income come in that particular quarter. So that's why you cannot see on quarter basis profits in JSW Energy or the operating performance. On a year-on-year basis, what I can talk about is that going forward, next year the capacity utilization and PLFs will be better than the FY18. And we have undertaken a couple of things in the current financial year, which we will be reaping the fruits going forward. One is that we have increased our long-term PPA portfolio by close to 10% so that will give a clear visibility and then a stable cash flow in next financial year. Second thing we have undertaken, we repaid close to 2,500 crore of debt during the current financial year till December. And also we refinanced our entire debt and our interest cost went down by close to 1.1%. So these two things will be giving us lower interest cost, and because of which our PBT will be positively impacted.
So you would, and EBITDA, the assumptions that people are baking in is that while your revenue growth numbers will look reasonably good in FY19 going into FY20 as well, EBITDA could remain stagnant. Is that a correct estimate, or would you beg to differ?
So EBITDA is a function of higher PLF. If we do higher PLF, then EBITDA will be positively impacted. And if our interest cost comes down, then our PBT will be impacted positively.
Okay. One last question. The electric vehicle foray, is this some time away, or could it happen sooner rather than later?
So our target is 3 to 4 years we will be launching the first vehicle, and at this point of time we are working on building the capabilities, and very soon we will be announcing something about the leadership team which will be appointed in EV vehicle space. And also we are working on the product strategy, for which you will be hearing very soon. In probably 6 to 9 months, some concrete plans will be announced.
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.